there. So I think better I step in a second and say good morning to everybody here from London. I hope everybody's well. Um, just waiting for Tiago to come back online. But I think what we were going to discuss, as he was mentioning, was uh, the idea of mobility, smart mobility, and how smart mobility is going to move into the area of open payments. So back to you. We lost you there for a second, so I
Yes,
just
yes, yes. Sorry, sorry, friends. Sorry, Mr. Udayan, as a technological tech hitch. And going forward, the most defining moments are here, and the way technology is defining the businesses are done. And the topic today is very interesting, given the India is moving towards smart technologies, digital India, and smart mobility is the order of the day. And today, when we talk about smart mobility, today, India also has witnessed one of the pet projects of smart mobility by way of initial implementation of what is called a fast tag, a pet project from National Payments Corporation of India on a national scale. A smart mobility is a new and revolutionary way of thinking about how we get from point A to point B in a manner that is cleaner, safer, and more efficient. Putting it in a simple manner, it signifies urban commuting, or for that matter, any commuting with zero emissions, zero accidents, and zero ownership, which means it is all in all green throughout. Today, the urban commuter has more choices, starting with maybe we have the traditional bus, car, and whatever, taxis. And today, this smart mobility will enable us a seamless travel from one end to another. And to define this in description in a detailed way, today we have speaker Mr. Udayan Goyal. Mr. Udayan Goyal is the co-founder and co-managing partner of APS Partners, London. Very good afternoon and good morning, Mr. Udayan from London.
Good morning. Good morning. Hope you're well.
Yeah. So Udayan heads the APS Partners as a co-founder. Besides, he is also a founding partner with Anthemis Group. A prolific investor with an exceptional domain expertise in banking and finance, Mr. Udayan comes with a much enlightened view of smart, or you can say digital finance and banking in India as well as in other parts of the world. He is a much sought after speaker, a commentator on digital finance, and he serves on the board of many digital startups. He is also mentor and provides a lot of inputs, financial and the capital, as well as the mentorship for the startups in the banking and financial services area. So welcome Udayan for yet another show of banking, business and banking dialogue. To start with, Mr. Udayan, we have crossed 50 continuous shows on the business and banking dialogue. Last week we had this the 50th show from Mr. Gulshan Roy, who is a Chief Information Scientific Officer from the Honorable Prime Minister's Office. And today I am the host of the show, Tyagarajan, and bear with me, my colleague, Mr. Krishna Kumar, is unwell, and I hope and he gets back soon on this platform as soon as possible. Now, on the topic of smart mobility, Mr. Udayan, your thoughts on what are the limitations compared to a traditional modes of transport, mobility or transport, vis-a-vis the transit of today we have a contactless payments. So what is your take, or what are the limitations, and where are we stepping into on this smart mobility?
So look, I think we need to you need to step back a little bit and first think about cities, because and when we talk about mobility, let's focus today a little bit more on cities rather than rural mobility, because rural mobility is a slightly different topic. Cities and the way cities are architected uh, at a very basic level rely on mobility. So the traditional paradigm has been that you live somewhere, either in a city or in a suburb of the city, and you typically work somewhere else in the city, and you commute from your place of where you live to where you work. Now, obviously, post COVID, I think some of those that paradigm will be shifted, and we're going to see a shift, and we can come back to that a little bit later. But that's broadly how cities are architected. And city planners think about how to zone commercial areas, residential areas, mixed use areas, leisure areas, basically a lot according to the flows of people through mobility systems, urban mobility systems. You can broadly split urban mobility systems into two categories: public mobility systems and private mobility systems. Public mobility systems are essentially a combination of mass transit. So that can be your typical mass transit, which is bus systems. It can actually be metro systems. As you've seen now, there's a Bombay Metro being built, Delhi Metro's up and operational, but metro systems have existed around the world extensively. Then can be things like shared mobility, which is essentially taxis, rickshaws, those even two-wheelers, because in many countries now, including Indonesia, the Uber-like platforms have a lot of two-wheeler transportation where you jump on the back of a two-wheeler, and that's increasingly happening in many places around the world because of congestion, and it's an easier way to get from A to B. But those are shared mobility systems where you don't actually own the means of mobility, you're renting it. And then you get into private mobility, and private mobility spans everything from bicycles up to obviously the traditional car and larger vehicles, which are private vehicles. And that's been your ecosystem. And in many cities, you see congestion is largely caused by private vehicles because, as you may realize, the actual percentage usage of private vehicles in a day is very, very small compared to, let's say, a shared vehicle. And so that's part of the reason. Certainly, when you look in the US and many of the places, you have very significant congestion during the commuting hours. So, in the morning and in the evening, in certain directions, because people are driving back and forth. Now, a few years ago, we started to embrace the concept of shared mobility, and you had the rise of Ubers and Olas and all the other different ride sharing platforms. And what you started to do was build a concept where you can share these vehicles amongst a bigger group of people. And so your utilization rates go up. And theoretically, what that means is that your congestion should come down because you have less vehicles on the road. You're just having them move around a little bit more, or you have more people sharing vehicles. And I think we saw quite a bit of that. And with that, as you know, came a sort of new revolution in the usage of how to pay for these services. So if you think about traditional public mobility infrastructure, you started out with the early days was people used to pay cash for their fares as you went in and out. Then they had some proprietary stored value systems that was specific to that particular system. So London Underground had its own proprietary card system that you had to use, or your both season tickets, etc., that were only available on those systems. Then, interestingly enough, you started to have what they call mass integrated transit, where you integrated the different types of mass transit. So, in the larger cities, let me take London an example. You have the overground railway system, you have the underground system, you have the bus system, and all of those were integrated into a single payment system, which then became known as the Oyster card, which was contactless and you could use it. And that required systems to talk to each other and understand how people were moving between the different systems and how to build them for that. And then we moved into open loop systems where actually you no longer needed that Oyster card. You could actually just tap your contactless debit or credit card and the system would automatically contact. So we moved generationally into more and more advanced systems as you allow these systems to talk to each other and you allow the data to flow between the different systems. That now, interestingly enough, is I think, going to extend into the wider shared mobility system. And what is the wider shared mobility system? So I talked a little bit about the two-wheelers, the three-wheelers, the taxis, the Ubers. We're also now seeing electric bicycles in many countries. We're also starting to see these kind of scooters, these sort of small scooters, the ones that the kids you normally saw the kids going on, those electrified. They're in many countries. Here in London, they become a common sight, and they're also moving into the shared mobility space. So there's companies like Lime that do electric bicycles that now you can actually hail on your Uber app and use that. You can find an electric bike and go from A to B. So this is all becoming all integrated, and one of the ways it's becoming increasingly integrated is because the systems allow the data to flow between different areas. So the electric bike system will allow the data to flow to the urban transport system, to the mass transit system. So you can start. So actually, there's a company called City Mapper here, very interesting, actually Indian founder, very interesting company. And they recently, a while ago, they created a single plan. So you pay a single fee per month and you can use all the different types of mobility in that single plan. And actually, that is where I think the future of city based mobility is going to be. It's going to be a pay as you go single fee that actually just charges you for the miles that you've traveled in effect. Now, whether they do that as a bundle price or otherwise, but that's where it's going to go. And obviously, that has massive ramifications on both how urban mobility is architected, but also how payments are architected within urban mobility. So that's a little bit of a primer, I think, on where we're going. And obviously, smart cities, which is another point around this, is an essential part of this because sensor technology is what allows you to know where people are moving from A to B, also allows you to measure these miles. So all of that then fits into the overall plan.
Yeah, which means, Udayan, it's interoperable across various transit platforms. As you said, this is interoperable among many transit platforms. So the payments have to be interoperable. So what is your views on that, Udayan? The interoperable
Yeah,
partner.
obviously, absolutely. I think obviously interoperability was always the key to this. You have to have interoperability because without interoperability, this, as I was mentioning earlier, the systems can't talk to each other. So let me give you a a commuter journey in a. I'm going to use a more advanced economy because this is where we're going to go to. So let's take a commuter journey in London. So you have a commuter. That commuter lives out some Sevenoaks in Kent, which is quite far out. They jump on their train, then they take the train, I think, all the way into London Bridge, which is where it typically comes into London Bridge Station here. They get out at London Bridge. They jump onto the Northern Line, which is part of the London Underground system. They take the Northern Line up to Angel and Islington, which is sort of northeast London. And then they come out and they find a Lime bike and they jump on the electric bike and they do the last 2 kilometer commute on the Lime bike and get to their workplace and leave the Lime bike outside. Now, what you have there is essentially three very discrete journeys. You have the overground journey, which is Sevenoaks to London Bridge. You have the underground journey, which is London Bridge to Angel and Islington. And then you have the final piece on the bike, which is from Angel and Islington to the workplace. So three discrete journeys. In a traditional scenario, he or she would have a season ticket for the rail journey. That season ticket in the old days didn't even include the underground journey. So they would have an underground journey season ticket, and they would have to somehow pay separately for the electric bike. In the new world, what you can do is you can just have a single sort of plan to pay for all of this, which is a season ticket that covers all of this. Now, in order for that to work, the overground system, that's British Rail, or the franchise of British Rail that's operating that, needs to talk to London Underground. And London Underground needs to talk to Lime, which I think now is owned by Uber. So they all need to talk to each other. And they all need to be telling each other, this person, their journey and what the information journey. And the reason behind that is they all need to take their piece or their cut of that fare, right? Now, let me take an analogy, which hopefully people will understand. We all have a mobile phone, and many of us travel with our mobile phone, right? So many of us I will go from London to Delhi or Bombay with my mobile phone. I don't change my mobile phone number when I go from London to Delhi or Bombay. I have the same mobile phone number. It's a UK number. I reach Bombay, somebody in the calls me up and I pick up the phone. Now, what's going on there? My network in the UK, which is Vodafone, is talking to, let's say, Airtel in India, which is where I'm roaming on at that second, and I receive the call. Airtel and Vodafone need to somehow split the revenues of that phone call between them. So they talk to each other. They actually do it through an intermediary because it's a very complicated system globally for mobile phones. There's a hub intermediary. There are two in the world. One is called Cineverse Technologies. The other one is called Mac, and they talk to each other. And by talking to each other, they'll split that revenue. So you have same thing in the smart cities. Your smart cities and smart urban mobility. You need to be able to actually have these systems talk to each other. And when these systems talk to each other, they tell you that data flow of where that person is going, and whether, and then we get into much more complexity. So does that person have credit, for example, to be able to use that portion of the journey? So they have to get an authorization, a little bit like a payment authorization. Does that person um, does that person has that person bought a plan in which this is an add-on, so there has to be some incremental charge? Because often, for example, again taking the London example, some people have a zone 1 travel card which only allows them to travel within a zone, and every so often they'll go into zone 2, but the system can intelligently calculate the excess fare of going into zone 2 for that one particular day, or etc. So again, you have that ability to do it. So the systems have to become very interoperable, to your point, in the sense that they have to be able to talk to each other and have this data flow going between them. We get it even to a bigger level of complexity when you start to think about urban mobility, getting into these last mile pieces like the electric bikes, the bicycles that you can rent, the scooters that you can rent for that last mile mobility, or actually jumping into an Uber. And then let's fast forward a little bit further, where the future is jumping into a driverless car or a driverless vehicle, because that driverless vehicle is an extension of large urban mobility. And again, the payments need to flow through that, the credit needs to flow through that. People need to understand your profile on the system and where you're going from A to B. So that gives you a little bit of an idea of that complexity.
Right. So, friends, we got a glimpse and details of with an example of how smart mobility with an interoperable enables travel commuting so smooth, so safe, and so seamless. Uh, Udayan, according to a McKinsey survey on urban mobility, one of the key trends in the urban mobility is the departure from unconnected suboptimal transportation system to on-demand connected system that uses data to unlock more efficiencies. Is there some examples to explain how this changing the paradigm, this changes the paradigm of urban mobility? You gave an example of going from British Metro to going with the Uber, taking the Uber, and then to the electric thing. So, can you take us through a little bit of more details, a journey on how this paradigm shift is changing the way the smart mobility is the order of the day in days to come.
Yeah. So to your question, I think I kind of covered quite a bit of that in, in my previous response. But this is how you're connecting these, as McKinsey calls it, the suboptimal transportation. Suboptimal transportation systems are these unconnected systems that then become these on-demand connected systems. So let's cover a few more points, which I think are fairly important in terms of urban mobility. I think so you need to think about a number of trend lines that are coming into urban mobility, which are going to be incredibly important, particularly on the on-demand side of urban mobility. uh, One trend line is obviously the electrification of vehicles, so electric vehicles, because that's something the government of India is also pushing very hard at the moment. Obviously, for obvious reasons. One is obviously energy efficiency and green energy, and the ability to use green energy rather than polluting vehicles, which and pollution, as you know, is a major issue in India and urban India. So that really needs to be solved, and this is one of the ways to solve it. So there's a big rise of that. Secondly, is obviously the rise of smart cities and sensor technology. Smart cities and sensor technology is important because you need to, in order to build a very efficient uh, urban mobility system, you need to have good sensors that understand where people are and where they're going, and the flows and the cars and every vehicle. And those smart sensors are now getting built into roads and across these smart cities, etc. And there's a big area of connectivity. So cars and vehicles are becoming increasingly connected, and they're becoming increasingly connected to the internet, and that feeds into this Internet of Things smart mobility system that's going in. We'll come back to electric vehicles itself, but electric vehicles very, very important, and I'll talk a little bit about that because I think it's important for people to understand how electric vehicles fit into this. And obviously within that is telematics and intelligent traffic. So once you start to put sensors on cars and the cars are connected and vehicles are connected, you also can know the flows, and then you can actually move traffic lights and things to create smart traffic and remove congestion. And obviously in all of these connectivity, we'll talk about this a little bit later, is the back end cybersecurity that you need to have in place, right? Because you need all of these data needs to be secure. And if you're making payments through this network, all of that needs to be secure. Otherwise, you'll have issues with breaches, data breaches, and potentially people stealing money. Now, as a aside, let's talk a little bit quickly about electrification of vehicles, because I think electrification of vehicles and then autonomous vehicles are very, very important. What's interesting is that if you remove private cars, 80% of traffic in a regular city is private cars. If you remove 80% of the cars, you remove all the congestion. Furthermore, if you make vehicles autonomous, you remove all the congestion, because if a computer is pushing vehicles around a city, you don't have congestion. Congestion is largely caused by stop-start traffic, which is a human issue. We drive and then suddenly we see something, we stop, and then that creates the backup. And that's how cities get congestion. You can remove all of that. That has a very fundamental impact on city and urban planning. And the fundamental impact on city and urban planning is as follows. Most people in the world's tolerance for commute times to their workplace is about 60 minutes. 60 minutes is kind of where people want to, the maximum they want. Now, there are many people who commute a lot more, there are many people who commute a lot less, but on average, it's 60 minutes. In a normal situation, in a normal private car situation, the mileage you can live in a radius from your workplace for 60 minutes is, can be something like, around 15 to 20 miles at best, right? So that's probably the best you can have. Now, if you are in a situation where you don't have congestion in a particular market, then what you end up doing is increasing the size of that radius, and so people can live much further away and commute in within that same time. So it has very fundamental impact on how cities evolve and how cities are planned. Think of COVID on top of that, where I think people are going to commute less and work more from home. And that has an even more fundamental impact on how cities are going to be planned and how people are going to go in and out. Now, if you think about electric vehicles, because it's quite important, and how obviously driverless cars and electric vehicles go together. How electric vehicles. Now, the fundamental problem with electric vehicles over the last 10, 15 years has been that electric vehicles are broadly very expensive relative to normal vehicles. Now let me give you some stats, right? An electric vehicle is typically around $12,000. I'm using a global number now. Is around $12,000 more expensive than an internal combustion engine vehicle today. Why is that? Where does that $12,000? So if we think that the average cost, we're using an average base cost of an internal combustion engine vehicle of $22,500. Of that $22,500, about $3,000 is the cost of the internal combustion engine itself. So if you remove that $3,000, your base cost of that vehicle is around $19,500. Now, what you need to add to that is the power and the electronics related to the e-motor, which is about $2,500. And then you need to add the cost of the battery. And it's the battery that really creates an enormous amount of cost in these vehicles. So if you assume a battery, the assumed cost, assuming an assumption of about $200 per kilowatt hour of battery. Now, just to give you some statistics, 2010, the average cost of a battery per kilowatt hour was about $1,000. Today, it's going to be in the region of $200 to $300. And we think by 2024, it'll be around $100. And at $100, you start to get parity with basically fossil fuel technology, right? But so if you assume that, then the cost of your battery on that basis is around $10,000. So if you add the $10,000 plus the $2,000 that you have for the electronics that you need in the vehicle, there's your $12,000 gap. Now, what that means is that most people don't want to buy an electric car, or electric cars are really uneconomical, because if you can buy a internal combustion engine car for $22,500, but you have to pay $34,500 to $35,000 for a electric car, why would you buy an electric car? Of course, there's savings on the on the fuel, but that would take years to make up that gap, right? So how do we solve this? It's been an interesting conundrum that people have been thinking of, and I think one of the people who are really at the forefront of solving this issue is a business in India called Sun Mobility, which is a gentleman called Chetan Maini. And Chetan has done a phenomenal job. Chetan was the original founder of a for those of you who have ever saw these little electric vehicles, these two-seater electric vehicles, especially in places like London, he founded that company and sold it to Mahindra a few years ago, and now he started Sun Mobility. And what he has created through Sun Mobility is swappable battery technology. The idea being that you don't buy the battery. What you do is you rent the battery. And the minute you rent the battery, the capex cost associated with that battery goes away. And the minute the capex cost goes away, you're at parity with internal combustion, and you no longer need to think about this big gap that's actually the biggest barrier for electric vehicles to come in. So actually, Sun Mobility, interestingly enough, is in Ahmedabad, is running all the buses on the swappable battery technology, the public bus system. You can pull out these batteries, get pulled out by a robotic arm and swapped in 4 minutes at Indian Oil stations around Ahmedabad. And then they're building this in Chandigarh and various other markets for like three-wheeler scooters to swappable batteries, and also two-wheelers that you can swap the battery. And they have these swappable battery stations in Chandigarh where you can come in, remove it in 3 minutes, and off you go. So this solves one of the key issues. And this comes to a very key theme, which is coming here, which is on demand. So we are moving away from this idea of asset ownership, which is the private car, the scooter, to on-demand usage, because swappable battery technology, all it is you're renting that capacity on demand. You don't own the battery, you're just renting the capacity that sits within the battery, and you're renting that on demand. And this is the key to all of urban mobility. Urban mobility, and actually future rural mobility, is all going to be the ability to use infrastructure on demand. Because the minute you use infrastructure on demand, your utilization of that infrastructure goes up exponentially. And with the utilization of the infrastructure going up exponentially, the cost comes down and the efficiency goes up. And what that means is that you can create much more efficient urban systems for all the reasons that I talked about, alongside the fact that you can actually, a lot more people can use it and use it much more efficiently. You can get to your workplace much quicker because there's less congestion, because you're moving everything to on demand. So this is basically giving you a little bit of a flavor on some of the nuances as you get into these new paradigms of mobility.
Thanks, Udayan. That's a wealth of information on the future of smart mobility with interconnected and interoperable payment systems. Udayan, going forward, is there any examples of, let's say, an actual live interconnected, interoperable, let's say, smart mobility in place other than maybe UK? Some examples, if you have, if you can tell us, the
Yeah,
viewers.
I think you're starting to see it all over the world. I think Hong Kong has a similar system that's in place. New York City has a similar system that's in place. San Francisco has a similar system that's it. They're all now building in different stages these ideas of interconnected uh, urban mobility systems. You're going to see it everywhere. I mean, the technology is much is fairly commoditized and easily available. So not an issue to get the technology anymore. The ability for these systems to talk to each other is it, and payments have become much more. So contactless payments now, which you 5-10 years ago you hardly ever saw anywhere, is basically normal. Most people have a contactless payment card. Post COVID, I think everybody will have one because people don't want to touch anything, right? So contactless payments, which is a key part of creating these urban mobility, I think we're going to move even further. We're going to move into RFID technology based on your mobile phone. So you know how you have Apple Pay and Samsung Pay. That's where you're going to basically be walking through your mass transit system without even having to take out your phone, and the system will automatically pick up your tag of your phone and bill you accordingly. So, and all of that also obviously removes bottlenecks and congestion and ticketing stations and all of that. That all gets removed. So, there's a lot of work that's been done in that, in various urban centers that brings it to that space. Yeah.
Yeah, that's fine. Yeah. So, friends, we are midway through the session of smart mobility and open payments. I request the viewers and attendees to put in your questions in the Q&A, or you can come in with an audio, and our team would enable you to ask the question directly to Mr. Udayan. Going forward, please put in your question, and let's not rush at the last moment. So, Udayan, what do you think is the factors that necessitate, you know, the need to make the transition to smart mobility? What are all the factors that decide to make a transition to smart mobility?
Well, I think the main factor is just to create efficiency, right? People want to be able to get from A to B in the most efficient manner. That's been always the case. I think traffic congestion and the inability, it creates massive inefficiencies, which has real fundamental effects on the way economies operate, right? If you get people from A to B quickly, their productivity increases exponentially. I can tell you myself, through this period where I've been doing largely working from home, actually, or working from home, my productivity is significantly greater because I'm not wasting my time getting from A to B, from a meeting to A to B. In Bombay, when I'm doing meetings, or Delhi, when I'm doing meetings, I have to basically schedule 50-50 ratios, right? 50% on the road, 50% doing meetings. So if imagine if I took that out, my productivity increases. So, using these systems and creating the efficiencies of shared mobility, and creating this the ability for people to seamlessly pay for that shared mobility in a very integrated mass transit system creates those efficiencies.
True, true. Yeah. Um, going on, that's a new world, and we need to glue on to the technology to make the whole world much greener. And smart mobility, if we adopt, I think, as Udayan said, there is a lot more potential, not only on the convenience, greater efficiency, and probably lesser cost going forward with interoperable payment systems in place. So, Udayan, there's one question I wanted to ask, which I believe is very integral to the relevant to the topic here. What are the factors that drive to increase the adoption of this smart mobility and enabling with an interoperable open loop payments going forward?
Yeah, I mean, the factors are, it's firstly, it's obviously people need to be in the formal financial services sector and have some form of electronic payment available to that. Now, whether that's using a mobile wallet or using a contactless card or using a bank account, obviously that's very important, because without that, then they're in the cash system. And the minute you're in the cash system, these systems don't work in cash, because they need to track you at the point of entry and the point of exit, and then calculate what you've used. Or if you're using some form of bundle system, all of that has to be electronic. It cannot be physical. So that's actually a precursor. So I think as we become more financially included in different markets, and as people have access to those types of payments, that's a precursor. The second precursor, of course, is having the different types of mass transportation and urban mobility systems in place in the first place, having their systems to be upgraded to a point where they're interoperable and compatible with sharing data with each other, and then having a will at the top to actually connect these systems together. Because for many years, that was the issue. You had the technology, you had the systems, but you didn't have anybody to connect these systems together. In much the same way that right at the beginning of the mobile phones, in many countries, including UK, UK, in the beginning, you had three mobile networks and they didn't talk to each other. And so if you called one mobile network to the other, you'd be charged punitive charges, or you couldn't even do it. So all of this happens, and so these are all sort of the precursors to get there.
Sure. Yeah. Uh, Udayan, given the Indian scenario, can you give us some viewpoints or a mind share? and how this smart mobility with an open loop payments can be implemented, or what is your thoughts on this for the Indian market? Are we
Well, look,
ready? Or we have, yeah.
I absolutely ready. India is more ready than any other market in the world, largely because of what we've talked about in previous discussions, because of Aadhaar and the India stack and the ability to store people's biometric data. I think you can build an urban mobility system where people use their fingerprint or their facial scan, like they do in China today. Facial scans are used for payments. You can use your facial scan. So as you walk into, let's say, the metro station, the facial scan will recognize you and you just walk through and it charges you. India has all the infrastructure to do it. Now it's a matter of just stitching it together, right? It's literally
Yeah.
stitching it together. And there are
Yeah.
four aspects to that, right? One is access control. So these are how you access it. The second is the authorization of the payment, which you can do through these biometrics and how, these smart ways of doing it, etc. So that you actually check if the person has the money to be able to do it. The third is the ability to clear that transaction, which is what I talked about before. How does that money get pulled from your account, then split up between the different constituents, and then somebody processes that entire system. So these are kind of the four aspects of that open loop system and how you build it. And so that has multiple form factors. So you have terminals in the mass transit stations that do it, or you have a camera that does the facial scan. You have some sort of platform that allows you to do the data interchange between the different entities, and you have a network that sits behind all of this. So I think it's all the components are there, and I think it'll happen. And you're starting to see that with the toll roads, right? India's electronification is going into the toll roads. All toll roads are moving to electronic tolls. People don't want cash tolls anymore. That is really the beginning of it, and I think you'll see that right. You should start to see that right across.
Yeah, true. So one of that project initially envisaged was that FASTag, as you rightly said, it enables a seamless movement of vehicles across tolls and interstate movements. So Udayan, it's a very interesting topic, and as you said, India is not far behind, or in terms of the technology, or in terms of the infrastructure. Do you foresee any kind of challenges or impediments in terms of, I will not say specific to India, in terms of the implementation across, let's say, the globe? As you see, the future is going to be the smart mobility with interoperable payments.
Until recently, the biggest issue was offline or online authorization, right? Because when you have a disparate transportation network, when you're going in and out of the network, I talked about the authorization phase. The authorization phase requires you to do some form of authentication, and the best way to do that is to have offline data authentication, right? So the way I think the first really clever system to do that was, I talked about it earlier, was the Oyster card system in the UK. Basically, those systems they completed a secure cryptographic EMV. EMV is this contactless standard authentication for each transaction made by a card or a mobile device. So you can use your mobile device. Here's my mobile device. You can tap it, and entirely offline without exchanging keys or data with a remote server that requires the authorization. So that allows the system to be highly resilient against counterfeit attempts, and whilst maintaining transaction speed, because it's important to have transaction speed, and allow high volumes of customers to go through the network, right? How did it do that? It does that by basically, you tap, it takes the information, and then the next time you tap, the system replicates and remembers that you haven't been authenticated online and authenticates you online at that point. So it essentially, and it also creates a sort of kind of mini credit. So it only takes so much risk on you, because if you exceed the credit, now because urban mobility payments are kind of small, you can take that risk. You can take a risk of default because it's small enough that and then if you default once, the system will basically create you on a blacklist, and then you won't be able to use the system again, right? So that basically allowed you to do it. The other point was that you needed to do it in a way that was very, very seamless in terms of authentication, right? And so the authentication needed to be, you can't have two-factor authentication. It's just, you got to be able to get into the system, and then obviously do the fair aggregation that we talked about. So I think that the key in all of this is going to be how does one implement a lot of these systems in there and put them in, and it requires a little bit of collaboration between the financial services industry and the mobility industry, and that's important, and I'll explain to you why that's important, because I don't know, we a few weeks ago, whenever we spoke about ecosystems, and the mobility ecosystem is, so if you look at the wealth and protection ecosystem, which is all of financial services today, the wealth and protection ecosystem, this is McKinsey data from 2025 in terms of volumes, in terms of actual revenue volumes, is worth about $1.1 trillion, right? The mobility ecosystem, same year, is worth $2 trillion. So almost double of what the financial services kind of ecosystem is worth. Now, obviously, if you can somehow get a piece of the mobility ecosystem as a financial services provider, it increases your revenues by double, right? I'm just using those numbers. I mean, that's not the exact number, but there's a real opportunity. And so here's the opportunity. And this is how financial services, because it's a very contextual product, we don't wake up in the morning and say, where is my card so that I can get on the public transport. It's like you get on public transport and you pull out your card, and that's something, a tool you use. So it's a contextual use of that. Everything is contextualized, and because financial service is such a contextual product, it fits very well into these ecosystems and the ability to piggyback on these ecosystems. And so actually it has a huge benefit economically to the financial services industry to start to collaborate. So I think the India point is interesting. You basically, I think all these ecosystems will come together because people see a financial onus to do so.
All right. Yep. Udin, going forward, you have any interesting case of a startup who is already deep into the smart mobility, offering the services to the customers? And can you give, apart from the e-vehicle of Sun Mobility, which you said the Minis company is doing in India, is there any other company in India doing, just to touch base so that the viewers can have an idea about how India is fast getting into the smart mobility? Or maybe you can give us some examples of companies, maybe startups or companies already deep into the business of smart mobility and open payments, so that viewers at least will have an idea about the readiness.
I mean, look, I think there's a lot of smart mobility startups. The thing is, you, there are so many parts of the value chain in smart mobility. Which part of the value chain do you want to talk about? Do you want to talk about electric vehicles themselves? All the OEMs, the heroes, all these guys, they're all doing their own version. I think that what's interesting about what I said about Sun Mobility is they're creating an interoperable, swappable battery tech that any type of scooter, regardless of manufacturer, can use. Their Piaggio's three-wheelers are using them now, and various other people are using them now. But the idea to create that sort of infrastructure, that's a common infrastructure, to me makes a lot of sense. So that's why Sun is a very interesting company. I think if you look at the data side of it, there are a whole bunch of startups looking at the data in that space. If you look at, so there's a business I think called Yulu, which is a technology-driven startup that's looking at last mile connectivity for electric mobility in India. So you see companies like that. You see companies that are, you have Ampere, which has now been bought up by Crompton, which built an electric scooter, which was a startup. So there's a plethora of these startups that are that are moving on, and there's similar ones all over the world, right? There are a lot of startups that are actually looking at how you stitch together these data networks. There are a lot of startups that are using the sensor technology. There are a lot of startups that are innovating around the financing side. How do you finance this? I talked about capex and the battery technology and maybe renting the battery, and how do you finance? I think one of the most interesting areas, interesting enough, that I've seen on the startup side is actually the usage of blockchain, which is interesting. That to be able to allow drivers with batteries to drive for free. Now that's an interesting one. So you're probably now interested. What is that? And actually, what's going on there is that basically batteries, these batteries that sit in these cars, apart from being expensive, which we talked about earlier, but getting cheaper, are an incredibly great way to store energy. And one of the biggest issues we have in cities, and actually in countries, is how to manage peak energy demand versus low energy demand. Because storage technology, the way we manage peak energy demand is we have some coal-fired electric station that fires up at a particular time of the day based on statistical analysis to be able to fulfill peak energy. So it's well known here in the UK that at halftime of a major football match, you need to manage peak energy demand because everybody goes to the kitchen and turns on the kettle to have their cup of tea, right? And you need to manage that peak energy demand. That's a very inefficient way of managing peak energy demand. And it's also not good for the environment and it's very expensive. So, one of the ways you can do that is by having all these batteries when they're sitting at home, when they're charging at home, to be connected to the grid, and they can become a store of electricity. So there's a startup that's looking at how do I use blockchain to authenticate each battery that's sitting in these cars that's connected to the grid to be able to fulfill the peak energy demand of that city by essentially, once you authenticate it, they give you a credit for the money you use for the energy that they use, and that credit can be used to recharge your battery that then allows you to use your car for free in the city. And that's using technology and really modern technology to do that, right? So this is a very, very interesting uh, um, uh, opportunity that's being, this company called Equigi, and it's the Equigi consortium that's putting this, that's creating this idea of let's reuse. And this actually comes straight back to what I was talking about. How do you somehow defray that large capital expenditure cost of batteries, because that's really what's stopping the large scale adoption. And this is a great way to do this. I said, let's use the battery to manage our peak energy demand. That way we can have 5 or 10 or 50 less coal-fired stations, or one, and take all of that off the grid and use this as a way of managing the grid. So basically, that so I think there's a plethora of startups out there that are doing all sorts of interesting things.
Oh, I'm lost out, Udayan. It's quite interesting and wealth of information and mind-boggling. I'm just lost out in the data and the kind of information. Friends, we see there is a tremendous potential of business. There is a tremendous potential of the way India could drive the future of smart mobility and open loop payments. Now, here is one interesting episode, rather one interesting thing that we can come to know. What is that to make the infrastructure in place well oiled? And let's not get into maybe interconnected of things or interoperable of payments. What is the basic infrastructure apart from, let's say, e-vehicles or electric charging of vehicles? Probably that's going to be the future, which is going to drive the greener, let's say, India, the greener earth across. So Udayan, what is your take? Generally, what is the infrastructure that is required to build such an ecosystem steady so that there can be a seamless movement of smart mobility across the platforms, across the payment channels and whatever? Basic some infrastructure, if you can throw light on us.
I think my answer is going to surprise you. It's actually the financial services infrastructure that exists below it. Let me explain to you why. If you're building a very high capital intensity uh, new infrastructure, so electric vehicles, swappable batteries, new vehicles that require it, that's very capital intensive. Now, nobody, as I told you before, people are going to be loath to buy these vehicles, these systems themselves, because their utilization, typical car utilization is like 10% or less, right? 90% of the time it's sitting on your driveway or somewhere else, right? Same thing with scooters and others, because the time we actually spend in cars is very low. Think of that same car in the hands of a taxi driver. The utilization is like 80%, right? That's how you should think about it, right? And therefore, your cost per mile on the 80% is significantly lower than your cost per mile for 10%, because both examples have the same fixed cost, right? You're just spreading the fixed cost over more miles. Now, it's exactly the same in this infrastructure point. If you can create a very efficient financing infrastructure, and this is asset financing infrastructure for the batteries, for the vehicles, for the charging stations, for the swappable battery stations, all of that, if you could create a very efficient financing infrastructure with the fact, then you solve that problem, because what you do is you make it economically viable for a city to be able to put that infrastructure out quickly in place. So in my mind, the number one thing is to have that financial infrastructure, to have that asset financing infrastructure at place with cheap sources of funding. And that cheap source of funding will come from the insurance companies and from the long-term holders of capital, because these are very long tail assets, right? A battery has a typical, I know from Sun Mobility's batteries have a typical lifespan of 5 years, and I think 3,000 charge cycles, right? So you have a lot of the ability to really sweat these assets out over a long period of time, and therefore your return on capital can actually be over a longer period of time, and so actually becomes more economical to have these assets in place because the fixed cost is defrayed over that longer period of time. So I think that to answer your question, to me it's actually the financial engineering and infrastructure that behind it, which is actually the game changer.
Very interesting, Udayan. Friends, please, I think we should make a note, being in the financial service industry, this one message that to move on to the smart mobility and open loop payments, we should have a strong financial services industry here. And I think India is really geared with large financial services players in place and with large mobility of funds coming in way of FDI, and financial institutional investors are ready to pump in money. I think the future we are going towards the e-vehicle, the electric mobility, and to back that, as Udayan said, the more stations, infrastructure required for charging stations, and interoperable, maybe batteries, interchange batteries, interoperable payment systems in place. We are geared. India as a country, we are proud. As from Udayan's message, we can say that our financial services industry is well oiled. It is in place. What we require is more capital, and India can take more on that. And Udayan, there is one question that is coming directly to one of the participants. Can I take the questions directly to you, Udayan?
Yes, of course, please.
Yeah, this is from Harish Prabhu, ex JW Morgan banker and CEO of some companies. Harish, can you
Yeah, hi.
unmute and ask your question? Yeah, please.
Yeah, hi, Udayan. I'm in the space. Just a clarification, Ampere was bought out by Greaves Cotton, and, I'm actually helping them build a financial services business. But the challenge there is that, principally the electric two-wheelers, largely in India at the moment, are what you call low speed. 8 out of 10 are low speed vehicles, which essentially means that they are unregistered. They don't require any, it's like riding a bicycle. And the challenge of financing from a loan perspective, because they are unsecured, because you have to give an unsecured loan to a movable asset, right, is a very, very, challenging, and none of the banks are coming forward to actually finance this. The second, so what is your view on how do you finance such a kind of the industry is growing at 87% CAGR. So at the same time, banks are not coming to finance an unsecured asset. So is asset financing the answer to this, or a lease model?
Yeah, it's asset financing lease model. So listen, the reason the banks, Harish, the reason the banks don't do it is that the banks haven't got their heads around the fact that there are technology solutions to all of this, right? What is the technology solution? If you look at Sun Mobility's swappable battery tech solution, which I've looked into some detail, each battery has a GSM card
Correct.
embedded inside it and Bluetooth technology embedded inside it. So when you pull the battery out of the charging station and you stick it into the scooter, the Bluetooth will talk to the scooter, and the GSM will track the scooter wherever the scooter is within the city, right? So the issue around securing an asset is how do you track that asset? You can stick a GSM chip into the scooter itself, right? If that's what you're looking to do. And now we're moving into very, very efficient ways of asset tagging using GSM technology because of Internet of Things, because we're way beyond traditional cellular technology. We have beacon technology and all sorts of other ways of tracking assets, right? So as long as you can track the asset and you know where it is, it should be relatively straightforward to secure it. More importantly, in my mind, the future isn't in traditional asset security. It's actually pay as you go, mile by mile, right? What do I mean by that? You have a scooter, and the scooter goes 5 miles. You should only pay for the 5 miles on the scooter, and then when you hand it over to the next person, they pay for the next All of that can be done through this tracking technology. And that's a full bundle cost of the capital cost of the battery, the capital cost of the scooter, the cost of the energy that's going into the scooter, the cost of the insurance. Remember, we haven't touched on insurance, but insurance should also be bundled into that as pay as you go. The concept of you just buying insurance again in an on-demand economy on a yearly basis disappears very quickly. You move into a very different paradigm for insurance, right? So financing moves into a different paradigm. Insurance moves. That's more of an issue with the banks in India right now. They just haven't got their heads around it, but people will get their heads around it, in my opinion.
Thank you very much.
Thanks, Harish. Udayan, there's just one question from one of the participants, Mr. Prabhakar Kaza. It says that, the British innovation, thanks to the British innovation creative ability, the question is, why is UK transport the most expensive in the world? That is a question from Mr. Prabhakar Kaza.
Why is UK transport the most expensive in the world? I mean, that's a very that's a very difficult question. It's a combination of many things. Obviously, UK has a very different cost base from most countries, particularly the labor cost base. That obviously feeds into the cost of both building mass transportation and maintaining mass transportation. So everything is dependent on the cost base. I think the way you need to look at the cost of transportation is relative to purchasing power parity in each country, right? And so I think if you looked at it on the basis of PPP and what it costs, transportation costs as a relative of PPP, it's not fundamentally different from most places. It may be higher than most places, but it's not fundamentally different, and you need to balance that out by other costs, right? So I don't think you can look at it as, UK versus India in terms of the cost per mile. That has to be driven by PPP because there's an overall cost of the economy and the people that sit within.
Yes, thanks, Udayan. I hope that answers well to the participant. I think this is a very technical explanation, Udayan, and as you said, it cannot do an apple to apple or apple to some other, not equivalent thing, comparison. And friends, this is a wonderful session. We are just in, closing on the 1 hour session with the exciting topic of smart mobility and interoperable open payments. If you have any questions, please let us know. We are nearing the closing session, and the final mind share from Mr. Udayan is there any point or is there any thought process, mind share you would like to leave on this topic of smart mobility going forward? Just a thought.
Well, I my only my only mind share on smart mobility going forward is that we should all be open to the idea of shared mobility. I think this concept that we all need to own 10 cars and have our own vehicles, I think that there's a time and a place for it. I think that will change. And as our own mindset changes, is the ability to I just to give you an example, I rarely use my car here in London. Unfortunately, I still have it. I wish I didn't. I have an electric cycle, and I try to use my electric cycle to my workplace. Although these days my workplace and home are the same, but in a normal scenario, I try to use that because actually it's far more efficient and far more economical, and it's better for me. My time is better for my health as well because I get myself out in a little bit. I think as people, their mindset changes in their thought. I know in India it's a difficult thought process to be able, but I think as congestion comes out of the roads through shared mobility, I think all of these other things will become more of a reality. So that would be my thought.
Yeah, Udayan, I think well said. With pandemic giving a lot of lessons, with social distancing as the norm, as Udayan said, mindset is what makes the difference. And as we look forward to the smart mobility and the open loop payments going forward in India is a near-term reality. And that's coming no less than from Udayan, the co-founding partner and co-founder managing partner of EPIS and also of Anthemis Group. Thanks, Udayan. I will not hold you further. And we have an excellent session with a lot of information, quite exciting and insightful. I'm so excited. I'm sure the attendees and all our my colleagues here on the show are excited, and we look forward to certainly ongoing fruitful session going forward in the next sessions to come. Thank you very much for sparing your time. Thanks, attendees. Thanks a lot. Without you, this would not have been possible. Thanks a lot. Continue to support EPS. We are live on YouTube, Twitter, LinkedIn. Thank you so much. Thanks, Udayan.
Thank you. Thank you very much. Good to see you.